Good afternoon, everyone. Thank you for taking some time to join our monthly webinar. Normally we do these on a monthly basis and we show you a sales concept or an idea of kind of pick a hot topic that's going on in the industry and then kind of wrap back and show how our product is a good solution for that. But today we're going to look at a little bit different approach, and we're going to use some information that Gallup has just sent us out on their latest survey. And so it's going to be divided into two parts. Today is the first part, and then in July you'll see an invite for part two. So we will go ahead and get started. My name is Mark Stueven. I'm the Vice President of Sales for Assurity Life here in Lincoln, Nebraska. And joining me today is Christy Megorian. She is going to be online, and she will be responding to questions that you type in, maybe doing some fact checking for me on some of the stuff I say, who knows. But feel free throughout the presentation to ask any questions, and then at the end we will go through some of those that are commonly asked and address them back with the answers. So Gallup's been doing this survey since 2001, and one of the reasons I like this survey is because one, it gets a really good feedback. Now in today's world with the technology out there, a lot of people aren't taking phone calls and doing surveys, but Gallup has such a good name out there that they get good response. The other reason is because this survey was done in April and the results are already out in May. A lot of times we get these surveys and they'll do data mines, and then it takes 1 or 2 quarters to get the information out. And the problem with that is sometimes it's lost its timeliness. Now this April, they do a different survey every month, and that one in April really focuses on social, economic, and political topics. So it's real timely with what we're going to talk about. And even though I won't talk much about politics, if you go back and look in the past at this survey, it does tend to skew a little bit by political party. So back when Obama was president, you saw the Democrats feel a little bit better about the future than the Republicans, and now that Trump's in office, it's swayed a little bit. So it is interesting to go and look at some of those affiliations if you want to look at the full survey. But to stay out of politics, we are just going to skip over that part and go through the survey questions themselves. So what Gallup does is they ask 8 questions in their survey with 5 different categories for Americans to answer to go about what worries them. They'll go from very worried to not worried at all to doesn't apply. And so we'll go through these. There's a couple that I point out that have changed over the last year. Now, for many years, not having enough money in retirement has always been the top worry, and that's no surprise. That's always been an issue and it's one that we do a lot of planning for. But in the last year, the tied for number one is not being able to pay medical costs in the event of serious illness or accident. I'm sure that's a direct response to what's going on with healthcare in the country. And the other one that's kind of moved up with that is not being able to pay for normal healthcare. So we'll kind of go through each of these a little bit. Again, if you go through the survey, most all Americans are very worried about one of these 8 topics. Most, or about half actually, are worried about more than 3. So there's a lot of opportunity for us out there, even if this one here doesn't resonate with you. So not being able to pay medical costs in the event of a serious illness or accident. Surviving a critical illness such as cancer, heart attack, or stroke, it comes with a lot of added costs and uncertainty. Means many times time away from work, additional medical bills. With the new plans that are out there and so many people buying on the open market, it is no surprise that this has moved up. Retirement, again, is tied for first, but it's still in the same as a top 1 or 2 concern. The only thing is that as the people that took this survey, a lot of them are in retirement, and so they do not have as much concern. So actually, if you look by demographics, this is probably still in the 60-70% range when you look at younger people. Paying for everyday normal health care. This number has went up as well. And again, I think it's in just direct correlation to what's going on with health care. Maintaining an average standard of living has been probably 4 or 5 forever and doesn't really move on this survey. Paying enough for college. This one it seems lower, but if you were to actually look at families that had children, 18 or younger, they go all the way to being very worried, and that number is 70%. So even though it's one of the things that we'll discuss today, knowing that information is a great opportunity for us. We know that there's a lot of solutions for these folks with 529 plans or mutual funds, using cash value life insurance to take loans off of. There's a lot of solutions that we need to be talking about, knowing that's a concern. Not being able to pay your monthly bills. I thought there was a few stats that were in here that I thought were interesting. 40% of Americans cannot cover a $400 emergency expense. And I thought about that number, and it seems really high. It's a little bit frightening to know that, but actually that number went down 10% in the last 5 years. Since the financial crisis, things have gotten slowly better, and Americans have gotten a little bit better, but the story is still the have and the have-nots. If you look at having less than $1,000 in your savings account, equates to 70% of Americans that are in that category. And in fact, 34% of Americans have no money in the bank at all. So again, that is definitely a concern. Not being able to pay your rent, mortgage, other housing costs, that's always an issue. That's always been around the same point. Average mortgage now in the U.S. is just over $1,000. And then the last one, I was surprised when I read the survey was so low, but I think it's semantics. Not being able to make the minimum payment on your credit card. So we all know what the minimum is. It's a really low amount, as credit card companies are taking advantage of accruing interest, and it's still something that most Americans can make that. But we also know that credit card debt's at an all-time high. So I think if the question was asked, could somebody pay off their credit card, that number would go up quite dramatically. But again, it's how they ask the question. So given these results, the survey kind of confirms to us what we've seen the last couple of years with rising healthcare, and that's there's a great need for protection and security with products that we offer. So the story today is really going to be to show you how to take this top concern of the medical issues and create a case for supplemental coverage. And we're going to focus today on our simplified CI product. But first, let's dig a little bit into the situation. Why are Americans so worried about healthcare costs going up? Well, here's a couple of good reasons why. Nearly 45% of Americans with private insurance under age 65 have a high deductible healthcare plan. Now, that's changed dramatically. In fact, in the last year, that's almost went up 5%. And if you think about all the Americans that have a healthcare plan, that is a huge number where companies are moving to this type of a plan, which definitely helps the employer out, but puts a lot more strain on the employee because they have to come up with the higher out-of-pocket expenses. When you look at exactly what employers are contributing now, the average is a little bit over $5,700 for a family's premiums out of pocket to cover their care. That number seems really high, but actually that number is skewed quite a bit because of all the big companies here in the U.S. If you look at companies with an average of 200 or less employees, which is a vast majority of the companies out there, their out-of-pockets go up to over $6,800 a year. And so one of the things I found interesting, I was doing some additional research, and one of the arguments is that, well, the good news is that copays are way down, which sounds really good, but that's because no one offers them anymore. It used to be we would go get our health care and we'd go into the doctor and we'd give them $20 for our deductible piece or our copay, get the help, and then the rest goes to our deductible or is actually through our insurance. Well, now it's all co-insurance. Big difference between copay and co-insurance. So you're paying a portion of that entire visit. So what that's led to is out-of-pockets continuing to go up. For an individual, that's about $3,500 and $7,000 for a family. And I just thought about over my career how that's changed. I remember a time when my out-of-pocket for our family was about $2,500. And then I remember when that went to $5,000, I thought, wow, that's going to change our life. That's a lot of money. And just thinking probably 2 or 3 years, that's went up another third. So those numbers continue to rise. And for most people, that's a lot of money if they're bringing in, $35,000, $45,000 a year into their household. So the result of all that is that personal bankruptcies are going up, and the number one reason is due to medical debt. And so 40% of all Americans are now in this situation. And I will tell you, one of the things that I thought about when I looked at this, I judged early on, but when I used to, before I started helping design some of the acceleration riders out there, I know that in my mind, I thought the number one reason for personal bankruptcy was all the people that overextended themselves and overspent. And so there's a little bit of a feeling of lack of sympathy for some of those issues. But here's the problem, is that with personal bankruptcy, if that does happen, lenders actually don't even know, or they don't even care to look at the difference as to why that happens. So if it happens that a family does have medical debt that takes them into personal bankruptcy, that is actually something that's going to be held against them for probably the rest of their lives. So what do we have to do? Is that we have to engage more in our solution-based selling. I think if we ask most consumers, they have no idea that there's insurance to protect against these critical illnesses. We spend so much of our time talking about catastrophes with consumers. We talk about healthcare or home insurance that protects against fires and from tornadoes and floods. We talk about car and auto insurance that helps out if there's been an accident and for your personal liability for total of a car. We talk about life insurance at the death of an individual, passing on money to their heirs. We talk about disability insurance to make up income when somebody gets hurt. But what we don't talk about is what happens when people are sick. And it's kind of ironic because I think about the last places, if any of us in this business want to do, is go after somebody's retirement. We spent our entire time working with consumers trying to help them grow that pot of money. And the last thing we want is this to go away, because as the survey says, it's still a number one issue with consumers, tied for number one, that they're concerned about retirement. So what we have to do is help them find another pool of money. And at Assurity, we can actually do that. We can do that through our critical illness insurance plans. Now, one of the things at Assurity we offer is both simplified and fully underwritten CI, but today we're going to focus just on the simplified part. So why buy this, and what's some of the advantages to that? Well, the nice thing about simplified critical illness is that if you use the e-application and there's no issues on the script or MIB, that you can get an instant decision without medical exams. A very fast turnaround. In fact, if we don't turn around an app in good order in 4 days, we pay the producer an extra $100. It covers some of the most critical common illnesses and procedures, which we'll talk about shortly. We added voice signature in the last year, so it doesn't even have to be face-to-face. The issue ages are pretty high, all the way up to 64 with guaranteed renewable rates of 75, up to $50,000 in benefit. So it's a pretty strong product, but there's a few things that I would point out to you. One, I just point out one of the reasons to look at Assurity is ease, the ease of the product. Another reason is the return of premium rider. You know, one of the things that we've all had to overcome with these type of products that are out there solutions when somebody gets sick, or if we think about long-term care, is that people don't want to pay for products that they don't know if they're going to need. They're very costly. It's not uncommon for long-term care to be $3,000 or $4,000 a year. And the number one objection is I just don't know if I'm going to need it. That's a lot of money to have a sunk cost. Well, in this type of example, there's return of premium built into the simplified and fully underwritten product that if you were to die outside of one of these critical illnesses, it's going to return the money back to those heirs. So that's a good story to tell. On the simplified product, you could actually buy a rider that at maturity would return all the money to the client, or there's a scale over the years up to that point that they can get partial return of premium. So again, one of the biggest objections that you're going to face, you can solve with the return of premium rider. One of the other advantages, it's a lump sum. To me, that's really important, and I'll tell you why here in just a second. But that lump sum payment can be used to not just offset medical expenses or deductibles or copays, but it can also be used to cover your house payments, keep your kids in college, maybe have somebody come take care of you. I don't know if there's anybody on this call that I've worked with over the years, but a lot of people know my father was in a nursing home for a long time, 13 years before he passed. I can't imagine what a process would be with a reimbursement method with those type of facilities. To me, the easiest way and the right thing to do to the consumer is to give them their money and let them do as they wish with it. So I love the flexibility that we provide with that. And then the last advantage is really this 3-category approach. And so let's take a closer look at that. So what can happen is if, an example, they take a $50,000 benefit, they have the ability to pay that benefit out up to 3 times if their illness covers into one of these 3 categories. So when I first started here, one of the first things I thought about, and I think about with everything, is would I sell these products to my parents? And I thought about my mother. My mother had cancer towards the end of her life with kidney cancer, had a kidney removed. And then towards the end of her life, she was actually diagnosed with Alzheimer's and dementia. And that's actually what's on her death certificate. A policy like this would have paid out twice in her lifetime, would have made a lot of difference to my brothers and I. So to me, there's a lot of powerful stories with that. And on a simplified basis, this covers all the big illnesses. If you do fully underwritten, it covers a few more than that. But I think that's a powerful story when you're talking to people. I mean, just think of some of the statistics. And a lot of times in this business, we tend to think about them all the time, but our customers don't. Heart disease and strokes, the top killer in the U.S., claiming a life every 40 seconds. Americans are going to suffer 800,000 heart attacks this year, of which 85% of those people are going to survive. Because of all the better treatment and care, the prices are actually going up on the price tags for your care. Every 10 minutes, someone in the U.S. is added to the organ donor waiting list. And then Alzheimer's is on here. And I think that's an important one. Being in the business now for 20 years, Alzheimer's, when I first got in, was something nobody would talk about, nobody would touch. There was no way that we could cover that issue. And now those things are being covered, which is important. People are going to live with Alzheimer's for a very long time. Their health cannot be affected. It's a mental issue. So it's definitely something that resonates with a lot of people when you talk about that being covered. One of the biggest things that we see this plan being used for is relief for out-of-pocket expenses not covered by an employer's major medical plan. But we're actually missing it if we don't see all the other conversations we can have with consumers about why this is an important product. So again, some of the advantages: the process is simple, the return of premium that's built in, and the 3-category approach. So let's take a look at a couple sales ideas. And we chose some sales ideas of younger consumers. And I think that's important because when I think of critical illness, I know a lot of times when I've talked to people over the years about it, they think of older consumers, which is important. I mean, they're definitely ones that you don't want to leave out. But a lot of times we're not thinking of younger folks. When I was getting ready to prepare for this, I thought about 2 weeks ago, a gentleman that I went to high school with was diagnosed with ALS. And so one of the things that we had put together was a GoFundMe page. And I'm sure everyone on this call is familiar with that. I'm sure a lot of you are familiar in church, maybe passing the hat an extra time for a young family that's having these issues. But a lot of times we're not having the difficult discussions with them to let them know there's protection out there. And so here's a good example of a young family. You can tell by the picture, probably early 40s. He's got 2 young kids, a mortgage. Well, his high deductible health plan has out-of-pocket costs of $15,000. Well, what's that person going to do when he's in his 40s and hasn't had a chance to build up his retirement? He's going to be one of those forced into medical bankruptcy, more than likely, or depend on others, which is an option if you have others to help you or you're willing to ask. But it's not the right solution for the most amount of people. So here's a good example of if you did a $30,000 benefit, it would cover him and his wife, both their $15,000 out of pocket. It would also pay $10,000 for each of their children. So right now they have 2 in this picture. Down the road they may have 4. They can just send in a letter to the home office, add their other 2 kids for that benefit. Now, the advantage to the family on this is even though the rates for the spouse are the same in the policy, they actually get a break on only paying 1 policy fee. So for $68 a month, they would have that coverage and peace of mind. Again, what is insurance that we offer to people? It is peace of mind. And I think it's one of those things that we need to have that conversation with every family we talk to, just to make sure if that is one of the things that keeps them up at night that we're addressing it. The next sales idea is about millennials. You cannot go to an insurance conference today with not being told how to market to millennials. We all know that the stats about how we need to have conversations with this group different, how they're going to change jobs several times. We hear about sandwich generations, where these people are moving back home with their parents in their 20s and 30s. All those things are important. Those are things that we need to think about. But at the same time, this is a generation that actually seeks out protection, and we tend to not think about it. And we don't think about it because there's a lot of people that think, well, the premiums are smaller. That's true today, maybe, but that's not true in the future. So here's an example of a female in her early 30s, bought her first home, paying that average $1,000 a month payment, has a student loan of, say, $250 a month. So if she were to buy, and maybe, as a millennial, maybe she's had a parent that's went through cancer, and she sees how difficult it is for them to keep their family in their home, and she's thinking about, what am I going to do if something happens to me? So for $26 a month, we could cover that mortgage for 2 years, cover 2 years of student loan payments, and help keep her in her home to get her thinking. And maybe not today at 30, but maybe down the road at 50, it's going to be an issue. One of the things that we struggle with was, of course, millennials are going to look in their mirror and they're not staring at mortality. They aren't thinking about dying right away. I'm 45 and I don't think about it all the time. But there's not a day that doesn't go by that I don't think about what's going to happen to my family if I get sick. And I think a lot of people are in that boat. But we're just not having enough of those conversations with consumers to let them know there's something out there. Now, what if they weren't to take it? What if they say, well, I don't really want a standalone? With the products we have out today, like our Assurity term product, that person could easily move over to a life insurance product and add a critical illness rider to it that still keeps her death benefit intact but pays out an additional sum of money if she has a critical illness. There's options, but there's not options if we don't open the discussion. So there's a lot of consumer tools that we have out there to be used. We have a brochure, consumer brochure, consumer flyers, videos, and there's a quoter for you out there to run illustrations on. And if you want more information of just like statistics and general information, you can go to criticaloutlook.com, and we've put a lot of information out there. So I hope you see that there's some good opportunities there to expand your market, to talk about products that oftentimes are in the back of our mind. But what this survey goes to say is it's in the front of all our customers. And so we have to make sure, if we're doing that holistic approach or having those good conversations and fact finding, that we're asking what's keeping them up at night and see that, maybe this is at the top of their list. So for those of you that maybe aren't familiar with Assurity and who we are, we've been around 125 years. We have products all the way from simplified to fully medically underwritten. So we do CI, we're a leader in DI, accidental death, a leader in term products, par whole life, simplified whole life, single premium whole life. We can provide that one-stop shop for you if you're an agent out there that wants to just build good relationships with the home office for all of your product needs. So that is kind of what we are known for. And then just a few things why we're different, a few things I would point out, besides strong commissions, and it's easy to use the products at Assurity. We have e-apps on virtually every product, and down the road here we'll have e-policy delivery, but we're a mutual holding company. And right now, in this low interest rate environment, it's tough for everybody, but for stock companies that have to look at quarter to quarter and to show earnings for their company, it's nice to be a mutual organization. Not to say that our biggest issue isn't the low interest rate environment, but we can take a longer term approach. So I think that you'll find by working with us, you'll see a lot of great products. I think the survey, even though maybe it didn't open too many eyes about the statistics, hopefully it gave you a different view of how to use these kind of results to position different products for consumers and kind of get back to learning about all the different products that are out there for a consumer to use. Now, next month, we're going to go through a different type of scenario with this, with a different type of product line to maybe create some awareness on how to use these same statistics for some other type of options. So, and I'll leave you with, if you like things that you're hearing or like where we're going, to make sure you're doing production with us and join our Leaders Conference in April of next year in Maui. We have one of the leading conferences every year in the industry, and this one will be no exception. So with that, I'm going to turn it over, and we'll see if we've had any questions. No? Christy says that nothing that she hasn't been able to answer online, so all is good. And with that, we will wrap up our time for today. I want to thank you all for taking the time to join us. Have a good rest of the week, and especially have a safe and happy 4th of July weekend. Thank you very much for joining us.